the lending market has changed quite a bit since the financial crisis, right? So a lot of loans now are not done through banks. There are these private companies that...
It's a massive market with companies like Ares Capital Management and Blackstone,
KKR. They've all got some fixed income lending.
Massive.
And if you look at, and the reason I'm bringing this up, you look at all the AI spending that's going on, right? And I think a lot of us most people are like, is this a bubble? I don't know if it's a bubble, but like, is this really going to make us all that much more efficient so that companies are going to be willing to pay the price to pay up to get this AI for the efficiencies, and then the AI companies are actually going to make money? That's what everyone's betting on. Is it real?
And are they just is it going to be a chase to the bottom where they're just wanting market share so much that they're just going to discount the price to the point that there's no profit left for anyone in the AI?
Well, if you think like when Uber first came out, it was so cheap to take an Uber. Or Waymo, the driverless taxis, for a while in San Francisco was $6. You could take it with $6, $8, something like that. It was nothing. Yeah. Almost,
product adoption.
Yeah, product. And so that's your point. Like, and then maybe they'll never. But why I'm mentioning this is in your fixed income portfolios, if this is something you're concerned about, make sure you don't have overexposure to that AI side of things. All these data centers they're building and all that.
You're going to have some exposure.
You're going to have some exposure.
There's almost nothing you can do about it other than individual bonds. And even then, you might have some exposure.
Well, I mean, that's the kind of thing that we as a firm pay attention to in our fixed income portfolio.
We want some exposure to it. We just don't want overexposure.
That's right. But if you're looking for the highest yielding fixed income vehicle right now,
careful.
Whether that's a fund or an ETF or a...
Careful. And some of the biggest firms out there are just buying them, just buying it all up and redistributing it through their investors.
Yeah, that's exactly what they do.
It's exactly what they do.
Yeah,
Which actually makes sense.
Think of it as like the private equity market, right? They raise capital. They go out and find private companies to purchase, to own. But they also funds just like that raise capital to go out and make loans. Sometimes those same companies.
Oh, the same companies. But not only that, they'll take a single issue, which is, let's say, Anthropic wants to sell $1 billion in bonds. A big institution might go to them and say, look, we'll give you $950 million for your $1 billion in face value. And then they take the whole lot and decide what they're going to keep on their balance sheet and then redistribute parts of it to other organizations, which might be another private equity firm. It could be a mutual fund. It could be any amount of people. And the way they make money is on that spread. They lent $950 million.
This isn't how it always. This is relatively new because it used to be
new.
Investment bankers. The banks would do this. Now it's not the banks any longer.
They can't have it on their balance sheets. And in fact, some of the companies, the big ones, huge ones, Amazon, they're doing these off-balance sheet projects, which are just really interesting. It kind of reminds me of like MCI WorldCom. I hate to say it.
Well, you know what? There was that
but these are
auto parts company. I forget the name, but it was a privately held company. Massive company.
Massive. And just levered everything through the portfolio multiple times.
On these off-balance sheets where it looks like the auditors didn't even know what the heck was going on.
Multiple times. They pledged the same asset multiple times. I pledge it to you, XYZ. I'm going to borrow money against this, and I'm going to pledge it to you.
That's like getting 8 mortgages on your house. Then no one knows. They don't know that you already have a mortgage on it. It's the same concept.
Same concept.
Yeah, same concept.
Does it work?
It did.
For a little while. Works for a little while. So when you reach for yield, remember, there's a reason.
Yep. There's no such thing as a free lunch.
Don't get too excited.